Good morning and welcome to the second of KPMG's Conversation Series on Africa. I'm Alishia Seckam and we're broadcasting live from KPMG's headquarters in Johannesburg this morning, where over the next hour we're going to be taking a closer look at the state of infrastructure on the continent, whether it be transport, water, power or ICT, because when it comes down to it, modern infrastructure is the backbone of every economy. So what infrastructural capacity do we hold? Where do we need to be? And what investment opportunity does that gap actually present? Why the hesitance by investors to delve in? Those are just some of the answers that we're hoping to get from our panel of guests this morning. Of course, to help me find those answers, we've got DeBase Scott. He's a corporate finance CEO of the Global Infrastructure and Projects Group Africa at KPMG. Pit Sabola, project manager at PRASA, Passenger Rail Agency of South Africa, of course, with us as well. And then Aiden Bakery, who's head of business development at Seckam, with us. Joining us from our studios in Nairobi, Kenya this morning, Kingori Gatenji, executive director at Drummond Investment Bank. Welcome to you all. Thanks so much for joining our conversation this morning. DeBase, let's start off with you, because the constraints to growth posed by inadequate infrastructure on the continent, whether it be, as I said, road, rail, power, ICT, is all too familiar, where we're constantly talking about the need to physically building Africa. What are you making of the strides being made and the pace of transformation we're actually seeing?
Morning, Alishia. I think infrastructure development really starts with the people and population. If you look at the current population in Africa, around about 900 million, that's expected conservatively to increase to around about 2 billion by around about 2050. That goes without saying. There's going to be huge investment requirements on literally all fronts: power, water. There's massive urbanization as well. So the pace and the trend and the opportunities there is enormous. You know, we just need to start at some point of time, recognize the opportunities and simply start doing so.
But we seem to have much of the blueprint. The problem is that it doesn't always effectively get implemented. You know, having had a similar discussion yesterday, lack of policy and regulation that's conducive to doing business in Africa crops up as top on the list. What do you see as being the major challenges to implementation?
Thanks, Alicia. I think the starting point is around infrastructure investment for many years, and I think we must accept that fact that technically we haven't been able to push up. I mean, let alone the regulation, the policy aspect of things. We haven't been able to push up the project that we think are obviously we can put up to the market and safely say that they are bankable, and that obviously requires us in Africa, obviously as a whole, to actually say, do we actually do a proper feasibility studies to the level where, obviously, when a private institution, wherever it comes from, it can carefully say, well, this particular project is bankable, I can safely put money into it and so forth. I think that has been a lack for some time. Obviously, we can safely talk about a couple of things around the constraints around the capacity and, of course, the skill shortage in other aspects of the economy, especially if you look at the energy, transport sector and so forth, because they obviously play a key role in making sure that it obviously underpins some of this investment going into the future.
Well, we'll be getting into the detail on some of those challenges throughout the next hour. Let's bring Kingori into this conversation at this stage. Kingori, because in the interim, we've got a current situation that's denting growth potential. And as I said earlier, we know that infrastructure capacity is the backbone of every economy. So let's use a territory that's familiar to you, that of East Africa. How do you see the inadequate infrastructure on that end impeding growth and the growth potential that lies?
Thank you very much, Alishia. I think perhaps just to give context to my answer, I think we're having this conversation at a time when Africa as a region is gaining much more significance in terms of the global investment landscape. So Africa is garnering much more attention from investors across the globe, and it's significance seems to be increasing. I think when you look at East Africa, it's actually a more positive story. When you think about infrastructure development, the past decade, from about the year 2000, has seen a much greater emphasis on infrastructure, and we are beginning to see the fruits. If I talk about here in Kenya, we've seen a massive investment, particularly in the road infrastructure and the ICT and specifically the telecommunications sector, that has reaped quite good dividends. So I think while we are yet to see the full fruits being born of these investments, clearly there seems to be a realization that infrastructure is key to development, and one would expect that in the coming years you would see the investment infrastructure that has been already put begin to pay dividends. So I think it's a positive story that speaks to the point we're discussing today.
Well, Aidan, while that, that investment case seems lucrative, as we had Pet highlight, it's bankable, projects that seem to be lacking at this stage of the game. I mean, we've got investors sitting at bay where Africa accounts for only about 4.5% of global FDI at this stage. As an investor in the infrastructure story, what's the investment case as you see it?
Look, I think, firstly, thank you for giving me the opportunity to be here, Alishia. I think, Africa as a whole is, especially currently, doesn't have great light in the media. We're sort of seen as a single view on Africa. And what we're seeing, and very much the philosophy behind Seckam when we landed the cable 2 years ago, is if you look underneath the surface and you look at the fundamentals, you look at GDP growth in Africa. I mean, 5 of the top GDP growing countries in the world are based in Africa. We've got Ghana, that was the 2nd highest growing country in the world. And we're seeing this, Ethiopia, Eritrea, and moving down into East Africa. So I think if you factor in this high GDP growth, we've got corruption being stamped out in Africa consistently. We're getting more democratic environment. The fundamentals for us were there. As we were chatting earlier about doing the valuation for these sort of investments. It's very difficult to do. For us to raise capital to invest the $600 million to trench our cable into Africa it was a tough process. But if you have the vision and you see the fundamentals, it's very exciting. And we think it's the only place in the world to be right now, especially in the ICT space and probably in the power space. So no, very exciting and definitely for us it was worth the risk and wonderful to see the dividends for us as a company, but also Africa as a whole, socioeconomically.
Debase, there certainly seems to be a growing, realization of that fact. I highlighted 5% of global FDI is directed towards Africa, but that comes off a very low base. And already over the past decade, we've seen an 87% increase in FDI inflows. What are you making of the kind of inflows we're seeing being directed into infrastructure, specifically on the continent?
I think the point has been made by Aidan, that I think the Africa continent for now is most definitely one of the more focused areas on as regards infrastructure opportunities. The continent has probably never been as peaceful as what it is right now, and it's awakening up to the opportunities of infrastructure development. There are more initiatives underway to try and stimulate that, but some of the challenges are still around. There's still massive reforms, legal and regulatory and PPP framework reforms. There are ways and means that we believe that can be improved. And as far as investors and bankable, the word bankable is used quite often. For projects to be bankable, banks and financiers are looking for, for systems and for processes and transactions that they're familiar with. They've got fairly familiar type sort of credit assessments and risk assessments. Africa is a little bit different. It requires a bit of a different outlook from time to time, and I think we need to realize that. I personally believe that will accelerate some of the processes.
Just taking a look at the hesitance we're seeing from investors delving into this sector a bit, what's your take on why we're seeing this hesitance? Because, I mean, I came across figures from NEPAD's OECD Africa Investment Initiative, and they outlined that Africa needs $93 billion annually over the next decade to fund infrastructure. We're currently seeing $45 billion annually being invested, and that leaving a funding gap of $48 billion. So that deficit is huge. Why the hesitance?
That's a very important question, and it shouldn't be any hesitant from an investor point of view, from where we sit, at least now. I think just even linking to the point that one made was the fact that obviously Africa needs to put out there a pool of bankable projects at any given time for any investors to come through. Rest assured, I mean, the 45 billion US dollars, obviously, that is being reflected as a funding gap in South Africa, in Africa as a whole, is huge, and that should represent an appetite for the investors to come through in Africa. Obviously, like any other investor who comes through, the issues around regulation that they look at. I mean, taking South Africa as an example of, I mean, we've seen in recent years where there's been some relaxation in terms of policy. There's a couple of incentives to put out there for any potential investor to come through and invest in South Africa and so forth. And I think even if you move to some of the SADC region, you will realize that there's some form of relaxation in terms of policy and so forth, and some of the incentives that you give out there. But of course, it remains a responsibility for us in Africa to keep on selling the story. And how we sell the story is the fact remains. We have to put out there this pool of projects at any given time. I mean, we were, and just a month ago, we did a market engagement with potential investors on the acquisition of rolling stock for Passenger Rail Agency of South Africa. What we wanted to achieve there was just to get an appetite from the market and so forth. And there was one issue that keeps on coming to say, guys, at the end of the day, what we want to pick up is that, is there a feasibility study for it? Is this project bankable for me to put rent and cent in this particular project? And I think that's an important issue that we have to realize from at least where we sit. But I mean, we keep on saying that you shouldn't look elsewhere else, because Africa as a whole basically is an untapped market. If you look at the infrastructure condition right now, we're going to invest for many, many years to come without fail. And I think that's something that we need to look out for.
Well, Kingori, until we do that, most infrastructure projects on the continent are domestically financed via African taxpayers and consumers, and that in itself is not proving to be a very sustainable funding model, is it?
You are right. I mean, it has been a challenge for many companies looking to fund long-term infrastructure projects to find funding abroad, although we are seeing a few of the more innovative companies make strides in accessing capital in the international market. And it will always be a challenge until such a time as we are able to prove in terms of one successful project after another that these are fundamentally sound investments. It's important to remember that when you're talking about FDI and international capital flows, it is to be distinguished from official development aid, that is what it took over from. Really now a case must be made, and it's an economic case. And that case will only be made with one successful project after another. And I think fortunately we are beginning to see some of the projects be completed and actually demonstrate above market returns. So I think it's important to remember that in the whole international development finance spectrum, in Africa, we are playing a catch-up game. We fell behind in the 1970s and 80s, and in the 90s when we began to claw back, it really began with the mineral and the resource sectors. So now that we're talking about infrastructure, that in itself is progress. And it, to me, is like a transition to what we once will hope will now be investment in the manufacturing and service sectors that we're beginning to see in certain pockets throughout Africa.
Debase, before we get into proposals for more effective funding from here on out, there seems to be a discrepancy when it comes to how much investment is actually needed when it comes to infrastructure development. In contrast to the NEPAD document that I outlined earlier, saying 93 billion annually over the next 10 years, some suggesting that Africa has an annual infrastructure requirement of $48 billion annually. Are we clear on what's actually needed in the first place?
Alishia, I personally believe the only answer to that is I don't think we are. I think we are clear that there's an enormous need in this continent. I think all these statistics that's been put on the table, there's at least double the spend required than what is happening right now. We are such a low percentage of the global FDI investments. That's all because we are at such an early stage of the whole, let's call it, development of the continent cycle. That will change, of course, in time. What we need to be clear on, though, is that we need to be bold, and we need to start somewhere, and we need to recognize in certain countries and certain industries, you need certain catalyst projects to get things going. We personally involved in certain countries where it's almost impossible to do business because of the status of reforms and track record, and I think the gentleman in Nairobi made the point as well. You know, we need a few transactions to start, to happen, which will then be the catalyst for momentum thereafter. And that, I believe, will be the answer to try and quantify exactly what do we truly need. So
getting the basics right, as opposed to from the onset trying to establish infrastructure that competes with emerging market peers on an international scale.
We're just trying, in my opinion, far too much to try and do all the normal developed market or more developed market basics, instead of trying to recognize in some of these areas in Africa, we need to take maybe a bit more risky investments, but you know, looking at the traditional ways of doing business and trying to look at, you know, normal track records or lack of track records, or is there rating capacities, etc., etc. That is not relevant there. It's not possible to do that, and you need a bold step to get going.
So within this context then, Aidan, I mean, you know, what would be a funding model that would be appropriate for Africa as you see it?
Yeah, I think just leading on from what Debase was saying earlier, you know, I think very much the Seckam story from our side was about demystifying fiber optics and ICT. And we've seen the plethora of projects, or the wave of projects, to use the right term probably, that sort of swept in since our launch, since our inception a couple of years ago. And I think, you know, we came up with the same questions. You know, I wasn't around at the time of raising capital, but Brian always told us a story. He said, everyone said, you're crazy. You know, what are you doing? There's no demand in East Africa for fiber optics. No one's going to use this bandwidth you're going to invest under the sea. It'll, you know, it'll sink to the bottom of the ocean and stay there. And I think if you've got some visionary investors, like we found, I mean, we're African funded as a company, and if you have the visionary investors who have that view on Africa, especially in ICT, to kick off or create sort of that catalyst to start the snowball rolling like we did, you see the results. And, you know, we're providing the returns required for our shareholders. But, you know, we're in a global market that's risk averse currently. And Africa sort of represents currently a high return but high risk model. And I think as the appetite improves, and as projects such as ourselves and some of the initiatives that KPMG are working on gain traction, I think you're going to find a huge influx of investment into Africa. That's the feeling we're getting now, and we're seeing it.
It really throws the spotlight on PPP and that PPPs and that funding model. How open is private sector to that option? How accommodating is government really?
How private sector is accommodating on this. I mean, the private sector, no doubt about it, they welcome to participate in some of these investments and so forth and so forth. Of course, the private sector will always look at the return of any investment and so forth. And I think that we need to take that into account. I think in recent times, we've seen couple of participations in the public sector investments, not at the pace that one would have obviously wanted. I mean, South Africa, for instance, back in '96, they introduced the PPP environment in hospitals and try some of those, obviously in the education side. Obviously, we haven't get some of the financial close on some of the investment. We've seen in recent times how train on a public-private partnership model. That's the way to go. To even think in Africa that the investment will be covered by the public sector, I think we're making a fundamental mistake. We have to open it up for private parties to come in, look at it. Like I said earlier on, they have to look at it, and we have to accept that fact that for them, they're there to see whether indeed there will be a rate of return. And that's the bottom line. For us, we have a much bigger responsibility to just make sure that indeed the work, the base work is done, just to make sure that indeed the project that is on the play, or a program for that matter that is on the play, is of bankable nature and so forth. That's the only way we can put up the footprint. But I'll tell you, if the traction is not that good, I mean, if you take 3, 4 years down the line to reach a financial close. After 4 years, you don't reach a financial close, you close. It becomes difficult to even get to another investment because you're like, it doesn't look like these people are very receptive.
Exactly, that merit seemed to be dissolved to an extent, or diminishes to an extent. Kingori, let's bring you back into this conversation. What's interesting is that we do see investment being made so more from cooperative relationships, and I want to take a look at a typical example. African government opening up their doors to Chinese investments in the mining sector, for example, if it comes hand in hand with investment in the infrastructure space and looking at infrastructure development. What are you making of that approach to funding?
Thank you, Alishia. I think you raise a very critical point. In our discussion so far, we focused quite a bit on the demand side of the capital flow equation. But if you look at the supply side, a lot has changed in the recent past. And a big part of it has to do with the emergence of China in the East as a dominant force in the world economy. And we are seeing China much more open in embracing Africa as an investment destination. And Kenya and many other countries in Africa have been huge beneficiaries of Chinese investment. And yes, I think the challenge really is to balance the investment and to learn from the previous experience of investments that were focused mainly on extraction and look to ensure that when that extraction is taking place, it is coupled with an investment in infrastructure. This is something that would boost the efficiency of those mining operations, for an example, as well as promote the multiplying effect in the economies where those investments are made to ensure that other investments then follow. So I think you are quite right, and I think many African countries are now looking east at the same time as they look west. And I think that has quite changed the dynamics because it really is not a one-horse game anymore. You are finding now many more sources of international capital flows.
And it's those, Aidan, that enjoy incentive like that are probably going to be more encouraged by it all. I mean, we know that in the private sector, a big hindrance, for example, to South African companies in the construction space extending their footprint has been as a result of reliance on government work, and in many instances payment for the work done not actually coming to the fore where fingers have been burnt before. Is that kind of concern justified from a private sector perspective?
Look, Alishia, I can only comment in the spectrum of ICT and our experience there. I'd leave it to these other gentlemen to discuss their sectors. I think from our side, the solution to that, and I won't discuss the problem again, is the PPP model. It's, for us, it sort of de-risks it in that sense, in that both of you have that shared objective and shared return in terms of the private and the public sector. For us, it's the only model to work with, largely because the returns in infrastructure investment are felt by the whole country as a whole. So often if you try and track those returns specifically at a private level, it's very difficult. But from a government incentive perspective, you know, there's been a correlation link between investment in telecoms and GDP return for the country as a whole. So as such, it gives a great platform for government to get involved in these transactions, as well as getting that important African buy-in in the investment, which for us is so critical, to have the countries that we're investing in involved in those investments. So for us, it's one way to avoid that issue, no matter how big it is.
Debase, one would assume that there's got to be some mechanism that needs to be put in place to address a wastage where, you know, you're looking at investing funds without tackling inefficiencies, likened to pouring water into a leaking bucket. You know, that's the kind of scenario that's out there. So what progresses are we seeing when it comes to reforms, policy improvements to actually plug those leaks, which will serve as a signal to investors in Africa that we are, in fact, open for business?
Well, Alishia, I think that comes to the core of what we're talking about. You know, how do we resolve our problems and the challenges and the issues? That's got to come to the extent of how do we do the PPPs. You know, let's do PPPs with approved and accepted and proven track record platforms. Let's take, for example, SADC. SADC, with South Africa as a leading, you know, part of that, having done PPPs for well over a decade, has gone through them all, has learned all the lessons. Why develop your own PPP frameworks in the rest of the countries? Just adopt a framework that's gone through that's gone through the, you know, the test of time, that's acceptable to funders, which is very important, and to the private sector. Private money is what's important to try and plug that hole. That hole will only be plugged if you bring in private money, who will come with a lot more diligence and a lot more care and steps and processes that the public sector does not have. And the combination of that partnership should give you the best possibility to stop that leakage.
Kingori, before we head into a break and before we let you go, I just want to touch on the fact that you hinted towards developmental aid. And what role in this scenario does developmental finance play?
I really think when you think about infrastructure development, fell behind, and really we are playing a catch-up game. There isn't any one solution, and I think we can't afford to be picky. So along with FDI, along with official government assistance, along with development and financial aid, I think it all has to be brought together, and including the private funds we find from the private sector, because such is the need. And we are seeing our governments open to all these things. And like I said, the balance has shifted. You're finding people looking to countries we never looked before for this kind of aid. You're finding a political game unfolding, if you like. And as the likes of China and the US jostle for international dominance, you will find that they're much more open to demonstrating their ability to lead the world economy by supporting African governments. So I think it really is in Africa's interest. It certainly has proven to be in Kenya's interest to be open to it. And I think we're finding the flows coming in through a variety of ways, including developmental financial aid.
Well, that's where we leave it for now as we head into a short break. Debase Scott, who's a corporate finance CEO of the Global Infrastructure and Projects Group Africa at KPMG, and of course, Executive Director of Drummond Investment Bank, Kingori Gatenji. Thanks so much for having joined our discussion this morning and sharing your perspectives with us. Of course, Aidan and Pitt still with us after this short break, so don't go away.